All right, welcome to day 3 of 100 days to profitability. So today we took this great trade right here. We finished the day on my account with $662. Full transparency mode, before we dive into this trade recap, I took a total of 3 trades today. The first 2 were losses, but they were smaller, and then this last one was a little bit bigger of a trade. I sized up just a tiny bit because I felt really good about it, and we made up all of our losses and more. So just wanted to throw that out there. I'm going to go through every single trade that I took, all 3 of them. So let's dive right into it. And I mean, I took this trade like 30 minutes ago, 20 minutes ago, or something like that. But today is Friday, March 6th, 2026. And let's go ahead and jump right into market open because there was a lot that happened today. So on the left side, I've got NASDAQ, and on the right side, I've got ES. I flip between both of them, and I just trade whatever one looks better, whatever one has a good setup. So today, I do want to show you there was a lot of high impact news this morning, an hour before market open. So one of the first things that I like to do on high impact news days is I like to go find the data wick high, which this is the candle that left all of that news data, and down here as well. However, down here we already swept it. So on the top, right down here, we swept it already. But on the top, we left it. So this is a really high draw on liquidity. However, it was kind of hard to tell if the market wanted to go all the way up to that data wick because we were just making lower lows after lower lows. We just kept going down and down and down. So I was actually looking for shorts this morning when I first got into market open. And if we look at the higher time frame, I want to show you something. I know I'm mostly showing you on NASDAQ here, but it was pretty much the same thing on ES. So on the high time frame on NASDAQ, we pushed into this first presented 4-hour fair value gap, and 4-hour or first presented fair value gaps typically almost always use price to respect it and keep going that way. So it was over here. We pushed down all the way into it. We got the data wick high right up there in the middle of this range. And so that was one reason I wanted to target longs, but I was also trying to flip between longs and shorts, right? Because we had all these nice lows down here that looked good. And on ES, it actually looked even nicer because we were still, let me go back just a little bit here. Let's see. On ES, we hadn't even taken out this low yet, right here. And I wanted to see us take that out. And so let me go ahead and delete a couple things here. Oops. I was more bearish as soon as I hopped onto the charts this morning. I was bearish. I wanted to see us take out either this low on NASDAQ or this low on ES. Yes, we were in this first presented 4-hour, and I wanted to also see how it was reacting out of that because there's a possibility that we might flip and go up and chase that data wick. Or if we don't use this 4-hour gap, we continue down to this low, right? And this one on ES. So let's zoom in a couple minutes after market open. And on ES, we ended up taking out that low. So we came up a little bit and we took out the low right there. So you can see that we swept it. And now we put in a really high time SMT divergence. You can see I have it marked right here. That's when one of the indices takes a low and the other one doesn't. So we've got this really big bullish confluence that's telling us that price wants to move up on ES, and on NASDAQ, we are still in this 4-hour first presented. We never swept this low. We never swept this low. So that to me is telling me that we want to go up. However, I still thought at this time that we wanted to go down because of this big wick, or sorry, this big candle right here. At the time, we were actually pushing into I believe a 30-minute and an hourly fair value gap right here. There's the hour one, but there was a fair value gap on almost every time frame right here. I'll go ahead and mark the 30-minute. This was a 30, where is it? Here it is. And then what happened was I zoomed in and I actually took my first trade about, let's see, where was it? I believe my first trade was taken about right here ish, give or take. Yes, it was this. So the reason I took this trade here was because we came down, or sorry, we came up and we swept these 5-minute highs. If I can mark it out here, we swept these 5-minute highs and then we started showing pressure to the downside. And yes, we just put in an SMT divergence. Yes, we are still in this 4-hour gap, but I thought that we wanted to go and take out even more lows, because if we're looking on like the 15-minute time frame on both indices, we are just so bearish. We are using every fair value gap to continue lower. So I actually thought my first trade we wanted to come down and at least take out these lows on NASDAQ. So because of that, after this little pullback, we swept these 5-minute highs. Let me go back just a little bit. I ended up taking a trade right here. On the 30-second time frame, somewhere in here, we inversed a gap. We inverted a little fair value gap, and so that's why I took this trade. And I actually, this is something that I want to kind of dive a little deep into, because this is really important for me to say it out loud so that I can start doing it. I went in on this trade with like half risk because I knew there was a small possibility or a big possibility of us getting stopped out. So I told myself, I am bearish on this trade, but there's a chance I might lose. So I'm going to go half risk on this. So I only risked 50% of what I normally risk. And then I told myself, I'm going to take half my size out here and the other half here. However, once we got down to that low, I actually did not take out. I instead told myself, I'm going to move to break even and I'm going to take all of my position out at this low down here. And so I pretty much deleted my first take profit. And I also told myself, I'm just going to move to break even. And then this is what I've done in the past, and this is something I need to get a lot better at. As soon as we took out this low here, I should have moved to break even, but I didn't, because I saw this one big candle go up and I'm like, geez, after like 1 minute of moving to break even, I would have gotten stopped out. I hate when that happens. And so I actually did move to break even, and then I was like, oh, it's going up, it's going up. I want to extend my stop loss. I didn't extend it, but I put it back to where it normally was. And I was like, maybe it's going to come back in here into my drawdown and then take out my take profit. But as you can see with this candle, I got stopped out. So I actually would have won this trade if I stuck to my rules, but I, in a way, broke my rules. Yes, I was half risk. Yes, I sized down and I was smart about my risk, but I could have done a lot better risk management. And I also told myself, if I win this trade, even if it's just like $100 from this first take profit, I'm just going to call it. It's a Friday. A lot of people blow their accounts on Fridays because everybody wants to end the week on a green week or a green day. And that, I've blown so many accounts on Fridays, and I told myself I'm not doing that. And that's kind of what I did. I lost a trade, and I basically broke my rules, and it wasn't smart of me to do. So that was the first trade. Now, after we did that, I thought to myself, okay, I still like shorts. I just, sometimes this happens actually quite often. Sometimes you just get manipulated. Sometimes it comes, sweeps your liquidity, and then it goes down. It likes to stop you out and then it goes down, right? That happens all the time. But because of that, here's what happened with my next trade. Let's go ahead and open it up on ES as well. Okay, so let's fast forward a couple candles. I was still looking for shorts. What I wanted to see now to enter a trade again was, whoops, let me see if I can get this. I wanted to see these two 1 minute gaps get inverse to the downside, and I wanted to take a trade kind of something like this. It was a little bit close to a 1-to-1 RR. I just wanted to target these lows and maybe even leave a runner down to this one. But that was the trade that I was looking for. And here's what happened. This is really important because this is where we need to kind of look at it a little bit more. So let me go back one candle. Let's see. Still trying to learn how to use this. Okay, right here. On the 30-second time frame, actually, let me go forward one candle. On this candle right here, we did not close below the fair value gap, this one down here. We still had space to go. However, on the 30-second time frame, I think we did invalidate most of these fair value gaps. So I actually got in a short. I kind of re-entered the same trade idea. And then what happened was I accidentally entered, instead of with micros, I entered with minis. And so my stop loss, instead of being like 200 bucks or 150 bucks, again, I was kind of sizing down on this. It was like 600. And I was like, okay, I just got this funded account. I can't blow it. And thank goodness I'm smart and I put trade evade risk settings of like 450 or $500 total of a daily loss limit on my account. And so what happened was I actually hit that loss limit and I got liquidated. Well, not liquidated, but I got stopped out and Trade Evade kicked me out of my trade. And I was actually grateful for that because I would have lost this trade the next candle. Literally one candle and I would have gotten stopped out. And what happened was I got kicked out of the trade probably like somewhere around here. So I only lost a few $100s and I was totally fine with that because I have my risk settings. I know if I meet those risk settings and if I have lost that much money already in a day, just call it for the day and then get back on the charts 24 hours later. So that happened. And here's where I also kind of broke my rules, but kind of didn't. At this exact same time, I had ES open on the other side. And what do we see here? Well, we swept this really high time frame liquidity, right? We just swept these lows. We put it in SMT divergence, and we still have the data wick high all the way up here. And we have on ES an hour fair value gap above us. So I was starting to kind of flip to bullish now because I got stopped out twice on shorts. I don't think shorts are going to work. And at the same time, if we go over to the 2 and the 3 minute on ES, we have got like a perfect unicorn breaker model, which if you don't know what that is, it's basically where you put in here, I'll draw it out real quick. It's the easiest thing to understand. You put in a low, a high, a lower low. So you sweep that liquidity, then you go up and back down. So I'm going to draw it out because that didn't make any sense. So this is what a unicorn breaker model looks like. You sweep the liquidity, you break structure, you give a little bit of a retest, and then you go. That's all it is. However, in the unicorn breaker models, what you want to see is the last leg down is an order block, a manipulation leg. There's lots of orders getting taken there because we're sweeping liquidity. And this last leg up is a breaker block. And if you can find like a little fair value gap on this side, oops, maybe a little fair value gap that looks like this. And if all of these overlap, then this is a perfect unicorn breaker model. And I actually have a little preset. Let me show you here. One of these, I like to use just the unicorn symbol because in this range where they all overlap, if we get a retest there, I like to enter right there, put my stops below the lows and target the next whatever drawn liquidity is. In this case, it was this 1 hour fair value gap. Yes, the data wick was way up here, but I didn't want to target all the way up there. That's an insanely big trade. So that's a unicorn breaker model. Plus, there was one more confluence that I liked. It's equilibrium. So you take the bottom to the top of the range, and in a leg up or a leg down, if price comes back and taps into the 50% line or lower, now that's kind of telling us that price is 50% off and it's kind of like a discount and we're going to continue higher. So in my little picture here, we didn't do that, but on ES, let me go ahead and draw all this out right here because this exact thing was happening. Let me go to the 1 minute because it makes a little bit more sense. So we swept the liquidity right there. There's our little money sweep. Whoops, not that. There's our money sweep. We've got the order block right here. This is the last leg down. And then we've got the breaker block, which is right here. And on top of all those, we also have two fair value gaps kind of on top of each other. This one and this one. And the best part about it is we also had equilibrium. We came back down after we put in this big leg up, and we came back down and tapped into the 50% off area. And then all I wanted to see from there was an invalidation of this little bearish gap, because let me go ahead and just delete some of these things here. You get the idea. That's a unicorn breaker model. And this is when I got stopped out by taking two shorts, I got stopped out. And then I saw this at the same time. I don't think this was a revenge trade at all. I don't think the second trade was a revenge trade either. I told myself, yes, I just met my risk settings for the day, and Tradebait kind of kicked me out. But you can go in and edit those risk settings yourself, and you can tell yourself like if you want to keep trading or not. And I was like, you know what? This trade setup right now looks really good. This is like a perfect setup for a long. And I don't even want to target anything crazy. All I want to target is just the next draw on liquidity, which is, let's go ahead and put this here. I don't know why my screen's so blurry all of a sudden. But all I wanted to target was this 1 hour fair value gap. And I don't remember if I did. I think I did. There's all these highs right here. This is kind of halfway through our trade. I wanted to move to break even right here just to have a safe trade. I already lost 2 trades, right? I didn't want to lose any more, so we moved to break even there. So that was why I took this trade. This is a perfect unicorn breaker setup. That's what it looks like. They're all just ICT concepts. Hopefully that makes sense. Hopefully I kind of drew it out for you and it made sense. But once we inverse this gap, I entered this trade, and I entered with the proper amount of risk, a little bit more than I would say I'm comfortable with, but I felt so good about this, and I already realized like, okay, like sometimes trading you have to be a little aggressive. I just took 2 L's. One of them was kind of dumb. I accidentally just traded with minis instead of micros, which happens. It's a stupid mistake, but it happens. And so I entered with 1 mini, proper risk size. I was fine with it. And I told myself like, okay, if I lose this trade, I'm going to be done for today, but I feel good about it, and I think this is going to hit. So once we got to about break even, let me go ahead and show you, fast forward just a couple candles. Right here, I think I actually moved my stop to just the bottom of this inverse fair value gap just in case, because sometimes we like to come back, retest the IFVG, and then go up, but not always. So about right there, I was break even on the day, not only on the trade, but on all my losses. I made up all my money back. And then after a few minutes, we kind of consolidated for just a little bit, but we went up and smashed our take profit just like that. So that was my third trade of the day. I am on my funded account now. I have 2 winning days, and I've taken like 2 or 3 trades each day. I still want to kind of dial down on my trades and just look for 1 good setup each day, maybe 2. So that's something that I know I can do better, but we're getting there, and it'll just take time. So other than that, here's a solid trade setup for today. We had a couple kind of iffy trades in the morning right before, 2 shorts that I got stopped out on, but then we had a really nice long, perfect unicorn breaker setup, and it was just a textbook A+ setup. So I'm proud of it. I think we reacted well, and I kind of kept my composure well after those 2 losses. And we are finishing the weekend and the week on a green week. So that's always good to hear. But anyways, today was day 3 of 100 days to profitability. I like to say it's 100 days of being profitable, because it's really just a mental mindset. If you just tell yourself you're profitable, you'll start acting like it. So I still know that there's some things that I can do better. Like I broke a couple small rules today, but when you're confident in a trade, like let it take you places. So other than that, we'll go ahead and hop off on the day. But hopefully you guys are liking these trade recaps. They're helping me a ton. It's kind of like a journal for me, a little back test slash journal slash personal accountability session. And it's just good to learn from our mistakes and learn from what we do good. So, with that being said, I will catch you guys in the next one next week. Have a good weekend. Peace.